So Netflix doing this thing. We'll see what you got conference calls. We'll see what tomorrow's reaction in the stock is. I know Netflix is usually a trendsetter for especially FANG. It's got a pretty good track record, but I think there's so much to look at this earnings season. Netflix is just one little pimple on the ass here. You got, I think these cyclical and global names are really interested to watch. They've all scorched over the last since the October lows, and especially over, everything has rallied significantly over the last 2 weeks. But names like Freeport, top of the mind. You might get sell the news no matter what because of the move, and we'll see if we see any buying into it. Yeah, emerging markets. There's a huge shift going on under the hood. Everybody's aware of it now. It's been that blatant. So we needed to see a little punch in the jaw, right? That's what we were talking about. If you remember on the last webinar, we were focusing on the right names, quote unquote, right? Overseas stuff, the new regime type plays. They just got too hot. And then you had the NASDAQ and the high growth stuff, the laggards, they were the last to squeeze, and then that's it. You usually get a little rug pull, and that's what we experienced here. So we needed that rug pull before, that was the first step, right? We needed to see that, we needed to get that before we could even entertain the thought of names again. Because you know what happens? You get that high correlation for a couple of days, sometimes a week, sometimes more, where because everything has rallied significantly, everything is going to sell off. So there's no reason to get in front of that, right? Especially when it's just the risk reward's not worth it up at the index level to stick your neck out. All right. So let's start with this. Let's start with the overall market, and then we'll dig a little deeper here. Okay. Again, when we left off, okay, this rally here, this, again, bear market rally, in my opinion, did what it needed to do. Everybody all sides short, right? Looking for the economy to roll over, looking for credit spreads to widen out, looking for the whole shebang, looking for the Fed to break something. They caught them and squeezed them pretty nicely here, okay? And at this point here, across the board, CTAs, hedge funds, specs in the futures market, they all went from aggressively short, okay, to at best neutral, if not slightly long, okay? So if you remember, we were talking here where in a bull market, okay, especially when you got the Fed at your back, you don't want to change the game plan. The game plan is to continue to ride out this uptrend and squeeze until everybody starts chasing and getting long. Okay, that's in normal market conditions or bull market behavior, right? In a bear market, what the problem is that because of the macro backdrop, you don't get that chase on the long side. Okay, you get that chase of covering shorts, and then at the least slows down, if not hits a brick wall. And we kind of been seeing that, right? CTAs, we're at the point where if things continue on the bullish side, they probably slap some longs back on, and maybe it snowballs into some momentum. But what happens? You get some news from the Fed, economic numbers, earnings, whatever it may be, because the macro backdrop is so bearish, it kind of puts a halt to all of that. All right. So what we're starting to see now, and more recent than anything else, is some of those outfits starting the process of putting shorts back on. Okay. So bottom line, we are, as we labeled it, in no man's land. Okay, downtrend in the bear market. You got a range that we've been in because positioning has been so bearish, right? We've been trading in one big box since the summer. The edge, the play off of that, the playbook, as far as playing the indices, is to play off the extremes, right? So for us, mostly long-only players, we're looking to ride these things, right? When they line up. Here, we're in the middle of la-la land, okay? And we're waiting for that to materialize. So while we've been waiting, okay, so throughout this whole process, we are at a point in this bear market where it makes sense to look at names. You have a lot of significant outperformance out there, right? We've been talking about this for a while now, since the October lows, okay? We started to see it even before the market made those lows in October, right? We started to see selective stock picking, overseas buying, China issues, gold miners, that sort of thing, okay? So that's what we've been doing as this rally, as we feel like the upside's not worth it at the index level, right? We've been focusing on names. The problem we ran into here is a lot of the stuff we've been focusing on is cooked, right? We looked at most of those names, right? We looked at, a Freeport, where if you want to own any exposure to copper, as far as equities are concerned, everyone's going to look towards FCX, okay? Hence, RIP. This thing, right, got out of control. And gold miners, gold in general, okay, all ripped hard. So we were at the point here where, even though these things are still in play and in bullish behavior, right? We don't want to chase these rallies. The opportunity comes when these things consolidate or pull back and you see that buying come into it again. All right. So that's what we've been waiting on. And lo and behold, we got that the last couple of days here. Okay. Start of it, but we got it. Also, I think to our benefit, we have earnings. We usually don't like earnings season because it gets in the way. I think for what we're looking for right now, while we wait for that better setup to materialize, as far as positioning is concerned, earnings, the reaction to earnings in a lot of these names, even the out of favor names, there's gonna be a lot of decent info in there, a lot of intel in there. I'll give you an example. FCX, right? You get solid numbers, let's say. Likely stock may sell anyway, right? Because they front ran that news. They already priced in a lot of that positive action. So if we do see a name like this come in and we see sweeper activity, which they've been doing, come in and absorb all the weakness, that's a tactical trade or even a trade for the longer term, intermediate term, if that's what you're interested in. Okay. So I think across the board, and even the stuff that's out of favor, I think is worth watching off earnings if they attract sweeper interest, because what we've been seeing already in a lot of these names, from the shit of the shit, like a snap, these things warn, their earnings are abysmal, but a lot of this has been already in the process of being priced in, right? These stocks have been mutilated. So what you usually see happen, earnings, boop, they buy it up and they squeeze them, right? So again, extreme tactical trade over the, like I said, extreme short term, or if you're looking for something more, which I wouldn't lean towards these type of names for something more. I would lean towards the stuff that's in favor more so. And again, all hinging on if we see some sweeper interest, at least for me. I want to see sweeper interest into those pullbacks to confirm that there's still an interest out there. All right. So that's where we're at right now as far as playbook and game plan, right? That's what we're focusing on. Again, all while we wait for something to clean up here, okay? And again, I don't want to spend too much time on the macro side of things, but because nobody knows, right? We're all taking the best guess on the information we have in front of us. It's impossible to predict and forecast, okay? But what we can try to do is the information we have at hand on a day-to-day basis, digest that and, see what it's actually trying to tell us. And what it's telling me is that, if you remember, we've been talking about this sweet spot we've been in, right? You guys remember, we talked about, and this is from, again, October, we started talking about it. And what I mean by sweet spot, okay, you have an economy that hasn't been or has been more resilient than a lot of people were expecting, including myself, okay? Jobs, obviously, people, it's hanging in there, may hang in a lot longer than everybody expects, okay? But even certain pockets of the economy were really holding up well. Retail sales up until recently, okay? So we were in this sweet spot where the market, okay, and the market's the best forecaster out there, and the market gets it wrong and has to adjust. But the market right now, okay, and I want you to look up here where it says Fed, is pricing in rate cuts in July, okay, midsummer. So what that tells me, okay, this is my takeaway from that. Come the summer, things are going to look ugly as far as on the macro side, okay, the fundamentals of the economy, okay? For the market to price in, and you can see they're pricing in cuts from that point on, okay? For that to come to fruition, that means we're going to see the wheels come off, okay, as far as the economy is concerned. So now we were at a point from the October lows till mid to end of July, okay? So think about that window there where you have some time where inflation is likely going to cool off, and it has, and the economy is going to hang in there longer than a lot of people were expecting, okay? That's why, in my opinion, you've seen a little piece of that pile of money on the sidelines from the institutions, okay? And this is what people got to understand. There's a big dichotomy out there, and there has been the case, okay? It's starting to unravel a little bit, but you had the institutional money, which is considered the smart money, okay? The professional money. They follow the market and the economy a lot more regularly. They're on top of things. They have been taking down risk literally throughout this whole bear market, okay? They haven't had long exposure to equities this whole entire bear market, okay? Sometimes they get aggressively short, they get squeezed, they cover that, they slap shorts back on, okay? But the pro side has never been aggressively long at all, okay? So there's a lot of cash on the sideline, right? So that's what we're seeing right now. A lot of that cash finding opportunities, and you like that word. And interestingly enough, it's finding opportunities not here in the States, not in US stocks, okay? Predominantly, it's finding it in overseas related names, okay? And a lot of these overseas markets are more value than growth. So you could also say more of a value play than growth play, but it's bigger than that, okay? You have markets, Europe, Asia, across the globe that not only have seen capitulation, which we haven't, right? Where everybody, even passive investors, throw in the towel and give up, okay? We've talked about that. Overseas markets have seen that, right? We talked about Europe, the DAX, seen it. How could you get long the DAX off those lows? Europe, I mean, they're going to freeze to death this winter, right? That was everybody's takeaway, okay? And lo and behold, regardless, that the money on the sidelines saw value there anyway. Why? Because everybody already sold, right? All the negativity you hear this a lot, and it's not the case in a lot of our market, but a lot of the negative news was already factored in. Okay, if everybody sold, how much more selling can there possibly be? And I think it was like 40 something straight weeks of outflows in Europe. I think they've seen their first week of inflows the last couple of weeks. Okay, and believe it or not, a lot of money from the United States has been going and finding opportunities overseas. Okay, and what I find fascinating about all of this, okay, is, I kid you not, the last time I seen something as drastic as this happen, okay, was all the way back off the post-2000 internet bubble crash. Okay, and kind of the same thing. Everybody was focused on the hot growth semiconductor names, telecommunication names, internet names, and watching to see where they would bottom or where our markets at the index level would bottom. And they missed a full-fledged bull market across the globe in so many different things. Okay. And one thing that you've been hearing a lot more of lately, right, which we've been talking about, is gold. Right? If you remember, we look back at the last big bull run in gold, okay, was back here. This is a weekly. If you look at post 2000, I think it was 2001, right? This is GLD. GLD wasn't around back then. I got to pull up the price of gold. But here you can see 2005, which was a couple years into the rally already, and you can see what gold did, right? So this is very similar to what we saw coming out of the post 2000 bear market. All right, and again, no market is the same, right? The backdrop's different. The Fed's more involved. It's technology's it's just different. But this bear market, and a lot of you have agreed with me, a lot of similarities from that 2000 bear market. Again, not necessarily as far as the economy and the macro side, but just the price action, the sectors, growth value-wise, a lot of the same. All right. And in my opinion, this continues. Okay. We still haven't seen capitulation here in our markets. I think it comes. I don't know when. Nobody does. Okay. It likely comes when the fundamentals of the economy and the job market deteriorate. It's already starting slowly, okay? But in the meantime, okay, while there's a good possibility we haven't seen the lows in the S&P 500, very possible, there's a full-fledged bull market under the hood that we need to pay attention to, okay? So when we see these highly correlated sell-offs, and what you're going to see negative headlines, negative news out of our economy or the Fed or whatever it may be, you're going to see everything sell off. And what we should see is sweepers step up into or off that weakness and buy the dip in gold, the miners, European banks, the whole enchilada. And we'll see more and more names participate. Okay, so there's still going to be these phases and these pockets that feel like we're still in a full-fledged bear market in everything. But you're going to see outperformance on the way down. Things hold up better in the stuff that's in favor. And when the selling is done and these bear market rallies come alive, you're going to see significant outperformance in the in favor issues, as opposed to the names that everybody else is looking for lows in. Okay. Unfortunately, the crowded stuff, and that's what it is, and that's why it's going through it, what we're going through. They're crowded. The names that we all would love to see a bottom in, investors have been buying for over a decade, been piling into this shit. Okay, more to an extreme the last couple of years, but it's been going on for a long, long time. That's the problem with trying to find a bottom in these things. Some will survive, Some will bottom and stop going lower. But based on history, the likelihood is most will be significantly outperformed by other stuff that people aren't paying attention to. So the point I'm trying to make is maybe a Twilio finds a bottom and, and forms that hockey stick formation, right? And trades in the range. And maybe you think you're Houdini and can trade that actively. But at the same time, you probably have cleanup trends in so many other things where you could buy weakness and ultimately see new highs. And that's where the flow, the good looking flow, should surface. Yeah, and that's, I think, when this all comes to an end, like what Praveen just said, I think you're going to see a lot of that go away. Okay, Tesla stock has been abysmal, but literally there is action in that name, calls and puts, like you wouldn't believe, nonstop. Like the stock is in full-fledged bull market. That's how much action. Literally every second. That's how much exposure people have had in that name. You understand? Not only are they trading it, I'm sure some are, but they're hedging equity and replacing underwater equity at the same time. And that's why they have a tough time. That's why they end up finding ranges at best rather than new uptrends. Even when, that's the bullish case. That's the bullish case. Now, yeah, you can find these names to squeeze at certain times. Just recently, okay? You just don't want to get carried away in it, right? You don't want to fall in love with these things, right? Like, for example, what we just saw was all the good stuff. Again, the good stuff, the in-favor stuff that we want to focus on, the egg already hatched, right? Every name we saw catch action was already up in a straight line, okay? And we had a scenario where the hedge funds were aggressively shorting the NASDAQ names as they're piling in to the overseas names that we've been looking at for months, right? Over the past week or so, they've been piling in. So we had just recently an opportunity where there's a decent chance that these NASDAQ names squeeze a bit, right? Get them covering shorts. And some of this overseas stuff chills out a little bit. And that's where we've been. All right. But again, the NASDAQ squeeze, it doesn't last too long, right? They don't last too long. And that's the problem. You can trade them at certain times, but you really got to make your money get out. Try to utilize stop losses as best you can. You kind of want to be in for the squeeze. If it's not there, get the hell out. You don't want to be stuck in these names staring at it and hoping they bottom. Not with the information we see in front of us now. All right. So that's where we are big picture wise, right? Nothing has changed here. You can see July is still what the market is pricing in as far as rate cuts are concerned. Now, the thing to watch and the development over the last couple of days, the reason why the market has sold off, there's some signs that the economy's starting to slip a little bit, right? Retail sales were holding up okay, holiday season, blah, blah, blah. All of a sudden, you got the worst retail sale number since 2008, I think it was, right? Manufacturing, you had the Empire State number. Manufacturing was already weak. You had a crash in the Empire State manufacturing number, right? No, that disaster, okay? So that's that's the overhang on the market right now, okay? The economy is starting to show some signs of deteriorating a bit. Okay, we'll see if that continues. All right. And if it does continue, what you're likely going to see is this July pricing being pushed earlier. Okay, because if the economy is going to start to unravel sooner, the market's going to start pricing in rate cuts sooner. Okay. And if the Fed doesn't cooperate, that's where the market can get a little frisky, right? And throw a tantrum and get the Fed to cooperate. The market is going to get the Fed to do what it needs to do eventually anyway. Always happens that way. Always, right? The market will take down prices until the Fed gives in, a la late 2018. Okay, so there are balls in the air right now that we need to keep an eye on. It's a good time to do it because of where we're at, right in the middle of no man's land. We're going to tactically trade some names off earnings reactions. So we kind of no need to be distracted by anything. We kind of want to see how some of this stuff shakes out. And here's the thing. And again, this is just based off what I see, and that can change. And that's what makes it so difficult. But from what I see, okay, the bullish case, all right, the bullish case overall is we continue to do the same shit we've been doing. Okay, meaning that some sort of range. Oh, wait a minute. We trade in some sort of range like this. Okay, again, this is the bullish case where when positioning gets off sides a bit, you see a move the other direction. You see opportunities in individual names continue to outperform, so you don't have to get stuck in this menagerie in the middle. Okay, and it probably can last till, let's say, early spring. Because think of it, the market prices stuff in ahead of time. It's not going to wait till July for selling. You understand? It's going to do that. If July's still with the market pricing in for cuts, we're probably going to see things start to unravel come spring. So we got what? February, March, maybe April? No, rate cuts do not mean a bull market at all, Again, rate cuts could be the start of capitulation. The reason I'm even talking about rate cuts, and those of you who know me know I've been saying that for a long time. Everybody wants rate cuts, thinking, boom, rate cuts, let's buy everything, la-li-da. That's couldn't be further from the truth. Okay, I've seen many bear markets where the Fed cut rates, and that was where the most aggressive selling in risk assets was, right? So that's not what I'm implying at all. What I'm saying is this pricing here, okay, is telling us where the economy is likely going to look abysmal. Okay, that's if the Fed needs to cut rates in July, shit hit the fan. Okay, the Fed is not going to cut rates with everybody wanting them and the market moving to new highs. Doesn't work that way. Okay, the Fed is forced to cut rates because something breaks or things are getting out of hand. They're too tight. You understand? So again, maybe this ends up being the bottom, maybe not. There's no way to predict that. How do any of us know, okay, the impact of everything the Fed has done, the most aggressive tightening cycle globally ever? How do we know what happens from now to July? You know what I mean? Something can break in the financial plumbing next week, and the Fed is going to have to do something about it. You understand? So the Fed can sit there until they turn purple in the face and say, no rate cuts in 2023. No way, no way. If something breaks tomorrow, they're going to have to do something about it. You understand? They have no choice. They have no choice. Now, maybe they'll try to take some different measures, right? So they don't have to cut rates. Very possible. But if the market's not okay with it, the market's going to spit on it. It's going to sell off further until it gets what it wants. But that's the thing. You can't predict it. It's a guessing game. It's impossible. Okay. All we know is that the market, which is the best forecasting tool on the planet, is telling us that shit is likely going to hit the fan in July. That's what the market's telling us. Okay. And our takeaway was we got a little window, and you could call it a sweet spot. It's not really that sweet, but you got a little window where some of that pile of money from institutions can find opportunities that have been oversold for over a decade. And that's what's going on. Okay, so that's the bullish view, in my opinion. Okay, range bound individual names, the place to look, trade off the extremes. Okay, the bearish is what I just mentioned before that. The economy starts to deteriorate. What we've been seeing recently is the first sign that things are starting to really fall apart. Unemployment and jobs start to participate as well, and everything gets pushed on fast forward. Okay, and what that likely will mean is that this range breaks. So that's why that's the bearish side of things. Okay, and you see how the market's kind of reacting, right? Bad news is bad news now. You see how that's changed, right? You got bad retail sales, a disgusting Empire State, the market sold. Okay, because the market already is aware that inflation's coming in and it's softer. It's well aware of that. What the market's now starting to worry about is how much damage. Okay, the Fed has slowed down inflation for now. Okay, what's that mean for the economy? You understand? If inflation is slowing, are we going to see a deterioration in the fundamentals of the economy? Right? And then lead to earnings, etc. So that's what we need to watch here. While we're waiting for something to set up that's more appealing anyhow as a whole. Okay, and the more appealing setup will be, again, these are some of them. I was looking for it from this. All right, here's hedge fund exposure. Okay, very easy to read, simple. Biggest short position of the bear market into these lows, October. They get squeezed. Here's the zero line. Slightly net long as a whole into the high. And you can see it's starting to come off a bit. Okay. What we want to see is them get aggressive as they have on the short side into some weakness. Okay, when they get down here again and are short, and we're probably going to see all the rest of the things that we look at line up, that's where we can start looking for that all sides bear market rally. Okay, so these set up the bear market rallies. Okay, everything else that we're looking at is setting up, these little short-term rallies. Okay, that really don't have much lasting power. This is the fuel, the gas in the tank for those bear market rallies that can move quite a bit. Let's see here. The other thing, what's this? Oh, these are the credit default swaps, right? Where we last left off here, Jackson Hole. Okay, the Fed is trying to, well, not trying, but the Fed's mission here is to tighten financial conditions to defeat inflation, right? And by doing that, you'll see spreads and swaps widen out, higher rates of default, right? So pretty simple math. In bear markets like this, every time credit default swaps tick higher and widen out, it weighs on the indexes, right? They're almost a mirror image, okay? So now you got down to the level where the Fed would rather not see things loosen up any further, okay? And that's why you're seeing a little bounce here and markets weak. Again, high correlation. All right, what's likely to happen at the end and probably July, okay, and something the Fed has no control over, when the wheels come off, right, and the Fed needs to cut rates, you're going to see this do this, bink, and that's included in the last chapter of the selling of a bear market. Okay, you see credit spreads widen out. You see a higher probability of default, and it weighs on risk assets. All right. But in the meantime, what we're looking for is something like this, right? To line up possibly with hedge fund positioning, CTA position, everything else, okay, to set up that squeeze, right? It's got some room to come in. Book my ass. God forbid. You want me writing a book, you lost your mind. Here are financial conditions. Okay, pretty much same thing. Spreads, the price of risk assets, equities, all go into financial conditions, right? So what you're focusing on here, the black line is the mortgage rates to get that. It's the blue line. Okay. The blue line moving higher is financial conditions tightening up. Okay, so think of it almost like liquidity being drained from the system, right? And when this happens, they loosen up. Okay, and again, high correlation, especially in bear markets. When financial conditions are aggressively tightening, you do not want to be long the S&P 500. Okay, because you're going to see the adverse reaction. Okay, you'll notice that these squeezes, and it all plays into each other too, but when financial conditions loosen, that's when the S&P 500 and equities trade higher. So this is recent. Here's October, and here's how much financial conditions have loosened from October. Pretty aggressively. Okay. Was this last little rally start on January 6th? Also, January 6th. Oh yeah. January 6th, I think it was more of short covering led by the NASDAQ stuff. Because that's where they were short. Yeah. In my opinion, the NASDAQ stuff, there's predominantly short covering. You have legitimate buying in all the other stuff, you know, and we see it in the flow. Like you see the gold miners catching 2024 bullish position, right? Unlike a Tesla where they're hitting same day expiration or weeklies, you know, they are accumulating longer term positions in some of this overseas stuff. Like I'll give you an example, right? Like today with earnings and everything else like this, you got Jan expiration this week and earnings season. To get a read from the flow is nearly impossible. We've gone through the reasons why, okay? But a couple names that piqued my interest just to have on my radar, okay? And we spoke about it in a room. This thing, but you can see how hot these things have been, right? This thing caught some repeat buying again. All right, what is it? It's a financial from Argentina. You understand? Like who the hell's gonna buy that with Kathy stocks flying, SPACs flying, right? Bitcoins flying. No one, right? But you look back, okay, and look how out of favor this has been. Okay, right? You can see how out of favor. There have been periods of time in the past where this thing caught fire. Not only traded higher, what the hell did I just do? But caught fire. Okay, this stock here went from where it is now, $9 or where it was, to 75 in this bull market. Good call, YPF, energy name out of Argentina. They've been buying this thing with 5 hands over the last couple of weeks. Okay, tattooing this thing. Here's what it looks like most recent. Look at this rip off the buying recently, right? And same thing. You pull up a weekly on it, right? And go back. You might even have to pull up a monthly. It'd be easier. And go back post 2000. Right here. Okay. So now look at this. Look at this. Okay. That's how long these things have been neglected. All right. So that's why money's finding these things, even though the backdrop is still shitty across the whole entire world. These things, they've been pricing in disaster for ages now. Ages. Yeah, FCX, same thing, right? FCX, I remember in the heat of a bull market when tech is ripping, who the hell's, you don't want to buy FCX. The thing was like watching paint dry, right? So now, and FCX is really interesting, okay? Because the thing is this, and I know some folks that are extremely bullish copper. One, Goldman as a whole, okay? They're doing cartwheels over copper. If institutions want to own or have any equity exposure to copper, the first name they build a position in, they're not looking anywhere else, is, EV demand is a big part of it, right? And a shortage, supposedly, I think that's the argument Goldman makes. But the first name that institutions are going to look at to have copper exposure is Freeport. China reopening, good call, right? So you see the bullish case. Now there are other, exactly, there are other Chinese names, other copper names, SCCO and all that. But I'm telling you, if they're going to buy SCCO, that means they already bought FCX. Okay, everybody looks to Freeport for copper exposure. It's the go-to name. Oh shit, copper's hot. I got to buy some. I'm going to buy Freeport. You understand? It's liquid. It's a leader. And if copper pushes higher, there's a high probability you're going to cash your ticket with Freeport. So, these are the things where you're probably going to see dips get bought and just a different tone and complexity to it, right? And, these things go through hibernation and then they get hot, right? They've been out of favor for a long time. There's been so much buying and energy over the past year. There's been so many. You name it, any name you like, it probably got lit up with buying. Some of the newer names that have been seeing the better buying, and I say newer because everything's been lit up, like Baker Hughes, this one, BKR, this Schlumberger and Halliburton, which didn't really catch too much flow compared to some of the others. They're starting to, I keep doing this. This is an astronaut company. What is this shit? Hold on. These things are seeing better action. So you name an energy company. I'll give you an example, like the ones they tattooed prior over the past year and a half. Devon, COP, Exxon, you name it. Natural gas names. They've been lighting all those for a year and a half. EMR, they bought somebody out, right? I think they made an acquisition, believe it or not. I wonder, this thing might be a buying opportunity here. Did they report yet? Oh, it's coming up February. Yeah, I think they bought somebody out in the street, thinks they spent too much money or some shit. SMCI, that's tech. Not a lot, but some of the hotter in favor names are starting to see selling. And that's good. That's good. I told you guys, that's part of the problem I had. Not part of it. The biggest problem I had is buying something that ripped like this and it's stuck here. You understand? Like, this is a big move. So this selling here, okay, this is what you want to see. This, right? If you're interested in these names, that's where you're going to find the entry in these things. The lower risk entry in these things. The names that refuse to sell off, those are the trickiest. Those are the trickiest. So now, like here, you got Freeport, which has had a really nice run here. You get earnings they miss, or even good earnings, they might sell it. And you might have some selling there. Now, again, if they buy it, that's your entry, but you don't want to be in it for that and then be underwater, right? So that was the pickle we were in, where you couldn't just go out and buy these things. Okay, the money is made in these things off dips. Not, you don't want to chase anything in a bear market. You understand? You don't want to chase anything. The difference between these names and the crowded growth names is that when it does pull back, there's a high probability it's going to find some support from buyers. And you probably buyers, you probably see some flow where you buy an Amazon or a Tesla off a squeeze, okay, it pulls back a little bit, or that little call buying you saw might turn into full-fledged aggressive put buying, and the stock could bleed out. All right, so that's the difference. Like here's an example. Didn't catch, I think it caught a late sweep here, but I got to look at it. It was right before the bell. Alcoa, okay, nice little rip, earnings, sell off. Okay, and I'm not saying every single one of these names that sell off earnings are a buy. Obviously, that's foolish. You want to see sweeper buying come in. You want to see sweeper buying. Yeah, exactly. Just because they're in favor doesn't mean you want to chase. Because it's you get that high correlation sell off, and you're gonna get your ass handed to you. Exactly. EMPH is a perfect example, right? Even if you're wrong, guys, even if you're wrong, off the pulls, okay, you have a better shot of making money. Okay, here, you may be right for a couple days, but if you don't get out in time, you're dead. You understand? Especially options. You're not surviving this, right? If you buy into the pull a little earlier, you have a shot to get bailed out. If you buy this, you're done. 900,000. A lot of people like Amazon longer term. A lot of people. But Bill, from my experience, I heard and seen that same exact logic post 2000, and I seen people get stuck in Cisco, Intel, Microsoft for a decade and pull their hair out of their head. You know what I mean? Coming out of the 2000 bubble, I knew everybody I knew was buying Cisco all the way down. Cisco was Amazon. You guys who weren't around don't realize it. You look at Cisco and Intel as dogs, okay? In the 90s, late 90s bull market, Cisco was the stock to own. Research in Motion, that was a maniac. But Cisco was Amazon. Now, if you say to yourself, well, I'm investing for the long term and I can sit through it and I really believe it, and blah, 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 blah. If you think it's worth the risk, then that's your call. But I've seen blue chip leaders be taken down to their knees in bear markets. Okay? Pain. I'm talking about pain. And the God's honest truth, you were better off no matter what. Even if you survived and held the Amazons of the world, whatever it was that you bought in a bear market and it survived and came back after 15 years, okay, you still were better off buying something else. You still were. And a lot of times these shifts, they last a while. It's not a given, but they last a while. Like tech went through, and I'm sure there'll be parts of tech that will be part of new leadership, I'm sure. Okay. But there have been cycles in the market where the financials were tech. They were the in names to own. Energy, they were the stocks to own. Home builders, they were the stocks to own. We went through a tech boom like the 90s. And it takes some time to work that off. Oh, Nortel, EMC. Think about it. There were And you're talking about they all were labeled blue chip. There was a lot of big WorldCom. Okay, I know family members that had WorldCom in their retirement account. Okay, WorldCom was like owning Lucent was another one. WorldCom was like owning a mutual fund. That's how conservative the outlook was. You know what I mean? And people, WorldCom, the CEO went to jail. You know, you're talking about total debacle. GE, General Electric. You're talking about people, 80, 90-year-olds who were holding on to the stock thinking there was no risk in these things. And GE, you know what happened to GE, right? Don't look at it now. This is a reverse split. It's back at 80. I think it's equivalent to be at $5 right now, GE. So, you know, and the banks too, right? The banks were darlings, and then they went to shit. I told you, I heard a crazy statistic. I think I told you guys, right? Citigroup. If you bought Citigroup in 2009, at the start of the rally coming out of Armageddon, you would be break even right now. Can you imagine? How's that even possible? I couldn't believe what I heard. You don't look at this because you don't, you know, people don't remember the reverse splits. Okay, look at Citigroup. Here's 2009. Look where it is. Citigroup, guys. This is not some SPAC name. Can you imagine? And look here. Craziness. Yeah, Fugazi's right. You know, so listen, we'll for the growth side, we'll have time, new leaders, we'll have, we can't look at that stuff yet. We spoke about that, right? It's too early for that. We got to look to see where the money's going now, finding opportunities so we could get through, survive this bear market, possibly even come out profitable. If there's action in names, we should. You know, we just got to be smart about it. That's all. Yeah, Citigroup. I mean, how could the current status of Citigroup be as abysmal as it was in 2009? I don't get it. How could the stock be at the same level? Like, you're talking about Armageddon, my friends, right? Armageddon. Like, I understand things are rough. They're not 2008 Armageddon, nowhere near it. Oh, you remember that? That was his favorite stock, Prince Al-Ali. That's right. You got a good memory. You got a great memory. Why don't we, let me see. I posted flows. Oh, let me see if I can find it here. It might be quicker if I do that. You know, we always like to entertain ourselves with the fun flow. Hold on. I posted it this morning. Maybe I can find it. Come on. Believe it or not, this is faster than me trying to search it with whatever emoji or label I put on it. All right, should be coming up here. And then we'll talk about a couple names. All right. Oh, here it is. I found it. All right, so this is out of JP Morgan. We're going to get updated. Oh, tonight we're going to get some updates, right? Thursday, it's Thursday already. I can't believe, is it just me? I know it sounds corny. These weeks go by like, I mean, I can't, how is it Thursday? The week is over? Is that what it is? The holidays? How is this week over? Oh man, I'm finished. Okay. It's the age, right? God, I'm finished. Younger, I don't remember it being like this. T, I don't want to hear that. I mean, it goes by so quick. It's scary. Scary. All right, so here's kind of a look pretty much where we're at, right? The this is not even the chart I wanted, but anyway. Here are the fund flows. Oh, these are bond flows. Here's this global asset. No, that's asset equity flows. This is not the chart. This is not the chart. All that filling. We've seen a little bit of a curl. We've seen a little outflow from our market into European markets. That's what we've been seeing. Oh, maybe this will have it. Yep. No, yes, it is. Here we go. Okay. So here it is. This is the chart. Hallelujah. Okay. You see that little shimmy? You see the shimmy? We got a little shimmy at the start. Okay. But this is what has to get worked off, guys. Has to. It at least the process has to get started. Okay. It has to get started. You don't get capitulation without it. Okay. You don't get all the selling is done without it. Yeah. And we're starting to see that exactly what you guys have been saying. There are other places, even besides equity, Mark, right, where people could put their money and not endure the pain. And we're starting to see it. And I think it's going to accelerate once the economy starts to weaken. Once people worry about their job, you're going to start to see some selling. CTAs were leaning to the buy side, but because of this pullback now, McBob, I think it dampened that buying. I think we're again in no man's land. We're in no man's land. But I'll be honest with you, the only opportunity was in NASDAQ, and it was short-lived, right? You had aggressive shorting a week or two prior to this bounce, and we've seen some covering. And look, here's 2021 here down here, the orange line. Look at the outlier there. All in 1 year, guys. All in 1 year. You know, that's all it takes. It's always, and there may be an exception, right? You never know in this game. That's the crazy part. You never know. You always hear, this is the first time ever in so-and-so. You always hear it, okay? But since I've been in the game, since I've been following the game, the last chapter of a bull market, okay, is this. All in, okay? So what I'm telling you is bull markets, okay, there are corrections. All the pullbacks are corrections in a bull market, meaning you can buy the dip and see V-shaped rally to new highs, okay, until the music doesn't stop until this happens. Okay, that's the last chapter of that bull market story. On the flip side, bear markets, okay, there'll be bear market rallies along the way, just like there are corrections along the way. But the final chapter of a bear market is that. And that will lead to this dead heartbeat. And that will be the wall of worry that fuels the new bull market. Yeah, exactly. This is straight up FOMO. This is everybody who was on the sidelines hearing about the Kathy names, the SPAC names, tripling, everything, right? All the sexy growth stocks, EV plays, out to wazoo. They couldn't stay away anymore. They stayed away. And look how long they stayed away. And this goes back even further. 2008 scarred everybody. I still have nightmares about 2008. I still have nightmares. Okay? After when the 2009 bull market started, like as we discussed, every correction and pullback was feared to be Armageddon again. You couldn't help it. That's how much damage emotionally, mentally, 2008 did to us. No one believed, no one. So that's the way it usually works. And when these guys finally get rattled and they give up, what usually happens is they don't come back for a long time. And when they come back, they usually come back in a big way. And that will be the end of the bull market. Oh, dude, you know what it was? The selling was rough. The noise around it, T, was, you know what I mean? Like the news on a day-to-day basis from the voting of the TARP. Everything was so dramatic, like it was just nuts. And then, the fear of run on banks, what banks are going out of business, the stuff people thought was never possible of happening in our financial markets, the fear was coming to fruition. Think about that. You see what crypto is going through right now? That was 2008. Okay. But you're talking about, our financial markets have been around forever, more established, insured, right? SIPC, insured, the whole 9 yards. But the 2008, you had a fear that you wake up the next morning and your money in your bank accounts might not be there. You couldn't have access to it. You hear these stories out of Argentina and shit like that, Yeah, remember the lines around the corner? The banks closed down. The ATM machines didn't work. It was nuts. But that fear, and listen, I'm not saying, you see guys on Twitter, oh yeah, I shorted 2008. I'm being dead straight with you. I was in my bunker for the 2009 lows. I don't even remember the 2009 lows. I don't even remember them. I kid you not. I was deep in the bunker. The conversations I was having with my wife, we were trying to figure out what money we had, in bank accounts, in investment accounts put away, what we were insured for. A big deal was, okay, all kidding aside, they raised the insurance limit. What it was just 100 grand. So if you had over 100 grand in a bank account, you weren't even insured. Okay, you weren't even insured. And a big deal was, if you guys remember who you were around, they raised the thing to 200 grand, remember? For the married couple. So, again, things that you would never worry about. I knew people, okay, I didn't get to that point, but I knew people who were collecting gold bars. I told you that. They used to argue. I said, what are you going to do with these things? What are you doing with them? Well, you got to have something. When everything burns down, what are you going to do? Your money's like that was the conversation. Like I had buddies collecting gold bars because they needed something to barter with after this thing played out. Craziness. Right? You know what I'm talking about, Bobby. People think I exaggerate. I'm not exaggerating. People were collecting gold bars, guys. Yeah, they were forcing and go if you didn't trade in that time, all these like documentaries and all you got, every single one of them's worth listening to. I saw one on Bloomberg with what's his face. He does great interviews. You know what I'm talking about. The glasses, the white hair on Bloomberg. He had the CEO back then of Morgan Stanley on. The story was just great. It just, the Fed went to him and said, listen, we're merging you with JP Morgan. And then Jamie Dimon was like, I don't want Morgan Stanley. Like, they were forcing mergers. Yeah. What was it? They were forcing mergers where CEOs didn't even want to be a part of it. Like, it was crazy. No, not Grant Rubenstein. He runs that private equity firm. Oh, I don't know if he does anymore, does he? But with the glasses. Carlisle. Telling you, that's another thing. I don't know, again, I don't want to make myself sound like I'm that old, but I'm forgetting a lot of names. I can't dig them I'm so burnt out. This game will burn you out too, This game will burn you out. Ritholtz, yeah, I know Ritholtz. He had the interview with back in the day I listened to with Chanos, and that was like the nail in the coffin for me to never get involved on the short side as a strategy. If you heard Chanos's interview with what's his face, you probably wouldn't short a stock ever again. Yeah, I love them. Yeah, we spoke about that, HC. I watch them every morning. every morning. They're awesome. Lisa knows her shit. John's awesome. They're awesome. I'm a Bloomberg guy anyway, you know? I'm a Bloomberg guy. Good morning, good morning. All right, so you want to talk some names here quick? Maybe you guys throw some names. Let me just throw some of the recent action here, okay? Again, take everything with a grain of salt here because of the week, all right? I think it's a good time to build a watch list anyway. I know some people don't want to be bothered, but with Jan expiration, you have a lot of Jan open interest that's just being replaced, so we don't know if it's new money positioning, and you got earnings, double whammy, okay? So any decent action, keep an eye for, you know, any further action when things clean up. I got a growth name that had some interesting action over the past couple of days. Again, totally we talk about the good stuff. This is the opposite, right? Totally out of favor. But you got, if you were in a normal week here, right? So we were in earnings season, no Jan expiration. This would be really, really interesting flow. Really interesting. They're buying June calls, not cheapies. They're laying wood, so it looks like fund positioning. And they're selling June puts. Okay. So everything you would want to see, you saw yesterday, the stock ripped off it. The market was still squeezing then. And then when the market rolled over, the momentum rolled over, the team rolled over as well. Into the selling today, they added, which is a great sign. You know what I mean? So again, with the disclaimer of everything I said, the action is interesting. I would say this though, February 2nd earnings, being that June is so far out, I would, you know, at least wait to see the numbers. You might get, you know, I give you an example. February 2nd, they report and the stock's down off the open. June guys come in and add. There's your entry if you wanted it. Make sense? Now, you know it's legit buying, one. Two, earnings are out of the way and Jan Expo was out of the way. And they came back again. You couldn't draw it up any better. Right? So that's what I would look for. And it's not that far away, February 2nd. Right after the Fed. You get the Fed out of the way too. All right, so that's on the growth side of things. On, you guys are naming some of the other stuff that's interesting. JBL, here's the problem, right? Look at this. Good looking stock, good looking action. I mean, wait, how do you gonna buy this here now? Right here into a niner? Again, me, I can't do it. Maybe you buy, you add if it comes in. It's just stretched right now. Stretched. But, you know, looks really good, right? Jabil Circuits. This thing is an old name. I remember this stock. No, this is not Chinese. No. This is a big boy, legitimate big boy. Look at the numbers here, okay? Oh, numbers T, unbelievable numbers, okay? They reported $2.31 for the quarter, okay? And they reported almost 10 billion in revenue for the quarter. Like, this is a monster. You know what I mean? Monster. So, but you know, it's more from my experience, and it's just a preference thing. Every time I look to chase these extensions, I either get caught in a little lengthy consolidation or a yank, you know? And if you don't buy the yank, then I think you can't buy it. You understand what I'm trying to say? If you're not going to add into a little shakeout, if it pulls back, then I think you can't buy it here. I think if you do buy, you got to be willing to add, my opinion. But you know, could it keep going? Yeah, these things have been out of favor for so long. What's the monthly look like on this thing? Look at it. Like, you got an all-time breakout here, right? And ridiculous numbers. December 80s. Yeah, December. There were a couple of sweeps the last few days, right? And I think last week. Let me see what the action was today. Today, December 80s. Yes, December 80s. December 80s. Let me see. December 80s. Those might be sold. They might have wrote those. It looks like they covered calls. Looks like they wrote those against stock. So somebody is on my page saying that the likelihood is this thing needs to breathe a little bit, owns the stock, and instead of selling it is writing the 80 calls and took in $10. So he's getting paid. Oh, that's a long time though, right? December's? Yep. But it's tied to stock. So I wouldn't forget today's action. I wouldn't pay much attention to it. I wouldn't pay too much attention to it. $10, 850 grand, yeah. And he don't have to covered calls, he can buy them back, right? The stock pulls back, he buys the calls, closes the position, and now he's long the stock again. So that's what he's doing. What are the names? We talked about the two Argentina stocks. Again, most of these things ran. Anybody have any other names that in favor stuff? Nothing newish, right? Let me see. So there was I always draw blanks too. And this one. Oh, FIS. That was chatter action today. The word is something here is happening, activist wise. It's a matter of time. It's a matter of time. They're pressing the company to do something. So that's why we're seeing now even some shorter term speculation trying to catch it. I think, is it buyout or activist? McBub, you would remember better than me. I can't keep track. It's one or the other. I know an activist may be forcing the company to sell. Maybe that's what's going on. But something to that effect. Waste management, right? Yeah, did this caught some action? This caught a sweep? Max? I think it caught flow recently, right? You got the bottom of a range here. So I like this as far as like spot wise. I like this compared to the extended names. Definitely looks interesting. Waste management. This is a solid company too, right? Yeah, look at that. These are behemoths. Yeah, spot wise, I like the spot. You're getting close to that bottom of the range there, where it should find buyers. Even if you're early, if the turn comes. Yeah, true. Very true, Presley. Very true. This name, this name is Cook too, but this is one that fits the bill. BHP. If I remember correctly, I think it was October. I think it was right around here where they were buying it. I mean, this is crazy, but so this again, you probably need a pullback here. RLX. Let's see that. What's that? Yeah, a lot of these things you need breathers. A lot of these things. If we get, a day or two of a pullback, we might be able to buy them and even trade them. If they catch action. What is this? RLX. Oh Jesus. I'm sorry, Emily. I can't bless this. I cannot bless this. Is this a SPAC? Emily, the problem is this, some of these stocks will end up squeezing hard, and if you can time them right, you'll be okay. But you got this hockey stick here. Oh, it's Chinese? Ah, gotcha. I think they're better Chinese names to own, Emily. But Chinese makes it a little bit better. You got a shot at some squeeze. Being Chinese. even some of the garbage Chinese names squeezed hard. But same thing, they probably need a breather, no? We all traded these names. Look at them. They could use a breather. But the go-to names, the big guys, Baba, Baidu, I've seen some nice flow into the rally. Baidu's interesting. Baidu's interesting. JD. Yep. And then you got some of the more speculative stuff that I like longer term as a roll of the dice for options play. See this now, you got to wait for a pullback here too. EDU, I think this one pulled back, right? The cheaper one. Yeah, here you go. You got this one pulled back. TAL. Yeah, Billy, these things should all do okay. I think you wait. Well, some of these things are pulling back. I would look to see which ones they buy off this pullback, because here's the problem I have. The next go around with these, after these Chinese names digest, and they may not be done digesting, and may be a little bit here. I don't know if the speculative names are going to participate as much next go around. Yeah, PDD is another stud. So I would keep keep an eye on the action in these names. But you're probably better off going with the bigger names to be, those are the ones that more than likely will see the flow. Gold miners, right? What do you do? What are you guys doing? I know several of you have been playing these things. I mean, you're not buying them here now, right? I'm sure you guys are. Anybody adding miners here? Or gold? Waiting for a breather, right? Yeah. I thought we'd get a little bit of a yank, but these things are holding up well. Look at this. Damn. So, if we get a pullback, keep an eye on them, obviously. The dollar, right? They've been feeding off this dollar. And real rates have been lower too, which has helped them out recently. Yeah, gold looks good. The only thing that I get worried about, even with China, if you remember late last year, November-ish, we were talking about it, looking at the names. Nobody really was too interested yet. They were still, oh, gold is scary, China's scary. Now it's kind of like on everybody's radar. And when that happens, there's usually a decent shakeout around the corner, Yeah, good call. China was still locked down. You're right. So now, it may not happen just yet. Maybe they rally, further until it happens. But usually when everybody's eyeballs are on it, you get a nice little punch in the jaw. Some news comes out of China that's scary. Example, remember, we were talking about it, this EDU here. You guys remember it? Look, right? Oh, here, remember the Chinese government got involved? When was that? That wasn't that long ago. Was that this? Jesus, that didn't last, huh? But you'll get some news, negative news, they'll sell. And what you're probably going to see is after a decent pullback, they'll buy them all up again. Yeah, I like this. I like this EDU, and I like this TAL as a more speculative play on the group if you are really feeling living dangerously, as the old Netflix what? 340? Wow. That was down, up, down, then up again, right? Made a conference call, I guess. Look at what the hell's going on in this Netflix? Netflix looks a lot better than most of the others, right? I still think it's going to be tricky, though. Yeah, even this one, too. The Meta. Because they got destroyed early on. But it's not going to be easy. Again, buy dips. I know I say that too much. But that's where you can even trade them. You buy dips, you can trade them. You don't even have to look for big upside. This name saw a little bit of action recently. They got earnings coming up. The cruise lines. Some of you guys traded the airlines. I hate the airlines, but what moves in some of these things? UAL. So we'll see. This, I'm telling you, my opinion, trade actively, right? Earnings reactions, you can even stick to intraday. I think the moves will be worth it if we see action. And I think build a watch list here, build a hit list as we get through some of the earnings season. God willing, maybe we even have positioning lined up too. We could get some wind at our backs. But a perfect time to build a hit list. Hoops. Well, college hoops, I'm on a cold streak, Khalid. I opened my mouth thinking I might make money this year betting college hoops, and I got my ass handed to me. I can't make money betting the bowl games. You do okay, Khalid? You talk about streaks. I'll be hot as a pistol. I'll rattle off 2, 3 great weeks. I get all cocky, and then it's almost like I get just as cold. Yeah, you gotta, you gotta stick to it. I lost money on the the Cowboys. Yeah, Brady, that team was awful, right? This year. But yeah, I'm waiting for baseball, guys. I'm a big baseball fan, as you know, and it should be a fun year. The Metsies are going to be good. The Yanks got some decent pitching. I don't know if they'll be good enough, but baseball, that's my game. I love baseball. I can't bet it. I can't. That's the one game I can enjoy with fantasy and not betting, and watch it and follow it. Everything else I have to have money on. Like the NFL, if I don't have money on the game, I don't even know who played tonight. You know what I mean? That's the NFL with me. And I know, like, it's weird because the NFL is like the big sport everybody follows. I'm not a big NFL guy. Baseball is my game. Under 140, I'm going to put some action on it. And if I lose my money, I'm going to hunt you down. But I'm going to play Hofstra under 140. Maybe it's a sign from the gods to end my cold streak. I'm definitely going to play it. Yeah, please hit. All right. Anybody have any questions? Anybody have any questions as far as setup is concerned? We've been talking about it for a while, but we know what we're looking at here, right? Maybe we get another day of weakness and it could set up one of these short-term tactical squeezes. I know the Elliott Waves crew is looking 38. We're on a 38.50, right? See, I see. Everyone's looking 38.50. Well, so much for that edge, huh? See, I see. Again, I'm no technician, but it's just a common, consolidation. I see, this, and then you get some movement or some news. Netflix might help, yeah. So you trade in here a little bit, and then one or the other, you get a little bit of movement. Chop box, that's down here. That's what I want to see. Is what you pointed out earlier, that chop box right here. Oh, my lines are awful. But yeah, in this neck of the woods, I think what we want to see is going to start to line up. It may take a little bit of time, but people will be calling for new lows and everything else. Yeah, I'm telling you, it's even knowing that names, you're going to see, you're like me. It's not going to be easy. It's not going to be easy. We're going to need to see proof. It's going to take time. You took the words out of my mouth. We're going to just be so quick on the trigger. We see green, we're going to yank it off the table immediately. But the thing is patience, and that's the tough part with us. I think we'll be better off is if we find some names at the better risk reward spot, the market as a whole, because at least we'll know that maybe if we're getting some help from the market, we can hold a little bit longer, but you're like me. I can't hold here because I'm worried that a rally is just going to get sold. You know what I mean? So like here, if you get a rally going, you got some legs to it. So, but it takes patience waiting for it. Have a good night, tell you. Be so frustrated went sideways for a few months. It's McBob. This is, honestly, that's what's been happening since the summer. No, everybody calling new lows, everybody calling bottom, new bull market, and look at this. Nowhere. Right? Nowhere. So the opportunity, again, they're not easy to pinpoint the time, but has been at the extremes here. But like, see the positioning. It didn't line up to the exact low. Here is where positioning was flashing off sides. So here's where you would start looking for some long exposure. So there was a little more weakness, but then when the rally came, you had some decent gusto behind it. Oh, you're talking about even tighter range, McBob, where things just go dead, huh? They would pull their hair out of the head. So McBob's talking about something even like tighter, staying in a range like this, right? Like something like that. Yeah. Wow. If the economy holds up, inflation easing, you might have the backdrop for it. You posted those CVS sweeps, but that line end up with 11,000 open interest. How come you didn't post beyond the two sweeps? Maybe they were blocks. T, were they blocks? When was this? The other day? They were probably blocks. If it's the action I'm thinking of, they were blocks. There was some block activity around it. The oil stocks, no, Mark. It's definitely spread beyond energy names, definitely. Again, like it's been a little tricky of most recent because earnings and all that. But it's not just energy names, definitely not. You got a little bit of different groups, miners, and there's no real sector outlier. If anything, I would say it's overseas exposure, but that's a variety of sectors, CVS, let me see that stuff. I'm surprised this stock hasn't done better, CVS. I don't know what the problem is. Yes, stock picking, exactly. Couldn't have said it better. It's exactly what I was saying. Stock picking with a bias towards overseas exposure. I know the healthcare names have come in. That was a hot spot, if you remember. A lot of the healthcare names have cooled off. They got too overheated. They were the first group to get overheated. Yeah, I'm going to run too, Jim. Have a good night. All right, guys. So we'll see. Take it day by day. But like I said, we should have some names to talk about throughout this waiting process. All right, so we just be a little patient. That's all. Always a pleasure, my friends. Enjoy the rest of the night. See you mañana. We'll see what Mr. Hartnett and the Flow Show have to say tonight. Have a good night, everybody.